Welcome to Views from the Top, the podcast from Arma Partners. I'm Sophia Metz, and I'm joined today by Harjas Singh from Shares. Welcome, Harjas, and thank you so much for joining us today.
Thank you for having me.
So your background is Revolut, then you moved from the US to the UK to become a tech founder. Can you tell me a bit more about your path and what led you here?
Yeah, I studied computer science in university, so I've been, very well versed with software engineering and being technical. Obviously, the university education was very much focused on project-based learning, implementing technical solutions. Post-university, I worked for a bigger financial institution as opposed to the big four or other software engineering companies. So at this institution, I learned a lot more about financial concepts. Naturally, in university, I wasn't introduced to the world of finance, but working at this institution taught me a lot. I worked across different roles in equity derivatives, market clearing, and it exposed me to a lot about how much constraint-driven this industry is. So in 2018, I ended up moving to London with that company. And after a year, I was in a position where I was done with the big company life, and I was itching to join a startup where I would have more ownership and the chance to deliver more. And fortunately, I ended up at Revolut in those early days. And the role I was hired for was to build the first commission-free trading platform in Europe, essentially. And it was a very big task because at this point, back in the day, there was not really a great product that allowed people to trade commission-free. And most importantly, the technical innovation here was fractional trading. So before this, people were used to investing in the markets, and they had to purchase full shares, which, as you know, can be quite expensive. And I think after this revolution that started off actually in the US with names like Robinhood and slowly made their move into the UK, investors were able to own a very tiny fraction of the stocks. And this truly democratized investing for the retail investor. So this definitely captivated my interest, and I joined Revolut, spent about 2 years there working in the trading team, the very first trading team to launch and scale this product for millions of customers.
And is that what gave you the idea for Shares, or how did that happen?
Yeah, very interestingly, I was at Revolut, and I think there was something very interesting happened in the sort of the global economic landscape. In 2020, as you know, we were hit with COVID. And as a result, the governments pumped a lot of money into the economy. And a lot of these folks with more money in their banks ended up investing into the capital markets, risky assets. You saw this huge investment into collectibles, into Web3, into stocks. And a very interesting moment happened during this time where we witnessed the short squeeze of GME and AMC. And there was this rise of the Reddit retail trader phenomenon. And it was quite a crazy time to be part of this whole thing. And we were actually in Revolut trading, feeling the heat when all of this trading activity went through the roof. And that sort of intrigued me, and I started kind of lurking on different social media platforms, and realized that the amount of gossip and the amount of conversation revolving around trading was just insane. And I think before this, the trading industry was very much a single player industry. Traditionally, you would sign up to a product and either you know what you're doing or you're pretty much left alone, right? And that's kind of how it operated. You sign up, you onboard, they give you some free share of stock and you start trading. But I felt that there could be something more interesting that could be done here. I realized that the best version of consumer truly only happens when there's a social layer involved in that. So we started, looking into this space, scanning Reddit forums, scanning Telegram channels, and that was where the idea for Shares was originally born.
Yeah, because originally you wanted to aim at retail investors, you wanted to make it social, but the company today is very different from that. What happened there? Where did the pivot come from?
So we ended up launching a social investing platform, and we did it in a very unique way. So traditionally, players that were trying to do a social investing product, they thought that let's take this investing product and let's shove a forum down there, or let's make a group chat there. And these were products that weren't architected to be social first. So when we started Shares, we essentially came up with a concept of allowing close friends that were already discussing investing to bring those friends onto the product and be able to have those chats in close circles with close friends. And the whole idea was that if you speak to other people, that kind of helps you inform yourself on what investing decisions to take. So we're trying to solve the education gap by using social. So yeah, we launched the product. We scaled the team and the company very fast. Within 6 months, we were in production. We launched it to friends and family and very quickly to the broader UK market. We became first on the App Store, huge traction. We also then successfully raised our Series A, $40 million, and used it to scale both the team, the footprint of our product, and also a lot of the capital was utilized for getting regulatory licenses. So that was kind of the initial story of scaling and building out the initial Shares product.
What happened for you to switch to B2B2C? I think in September 24, you built an MVP for a new product in just 1 month. What happened there?
Yeah, very interestingly, I think we first launched in the UK market, and we spent quite a bit of time waiting for the regulatory approval. And without that, we were quite constricted on the amount of product features we could launch. And an interesting learning we had was that though social investing was a thing, the social layer in itself was not enough to convince a retail investor to use the product. You still needed a very, very sophisticated investing product with tax wrappers, with a very wide asset universe, and cost efficiency for them to be convinced. And the social layer only enhanced that experience. Fortunately, at that time, we had also applied for a French authorization. And luckily, we were able to get authorized by both the AMF and ACPR in France, which prompted us to launch the product in the French market. Now, because we were fully authorized, we were able to launch a very comprehensive product in the French market with all assets. So you had stocks, ETFs, even cryptocurrencies. And we were able to launch the very famous French wrapper PEA, which allows customers to invest tax-free. It's kind of the ISA version in France. And we noticed that the product in France was naturally growing much faster than the UK product. So it made sense for us to focus completely on the French market. Now, as you know, in B2C consumer trading, there were a couple of things. Firstly, the CAC was extremely high. We had to spend a lot on marketing to attract customers. And also the business was very cyclical. So as the markets do well, people tend to invest more. Bitcoin is going up, people will eventually buy more. We make money through transaction fees. So it was a very cyclical business. And we realized that the kind of company we were trying to build was to build a kind of long-standing, mature business that could last the test of time. So very interestingly, in 2024, me and my co-founders were having a discussion on, what would be the next sort of best way to move this business. And we sort of went around the table and we were discussing how each of us sort of managed our money or our family's money. And one of the key themes was that, I have a guy who manages my money. And for example, me, I send money back home, and a lot of that gets invested through a financial advisor back in India. And that was a very interesting insight for us, was that a lot of the sort of high net worth folks or people with larger sums ended up investing through this financial advisor figure. So we were like, okay, so the secret really lies in finding this guy. So all of us, we sort of started to get familiar with the industry. And there was this tiny item in my product backlog, which was building products for money managers. It was like down at the bottom. We thought we'll get to it at some point, but we ended up moving that first. And in true sort of Shares fashion, The French team came back from their holidays in August, and in September 24, within 30 days, we launched an MVP. It was probably the most sort of energizing sprint of my career, because we got rid of all the sort of layers or any kind of processes. I was working on the product directly with a very tiny team, and within 35 days, we launched a basic MVP, which was called Shares Pro. This offering was targeted towards financial advisors, as you call them, CGPs in France. And it solved kind of just three basic problems. The first one was a very streamlined onboarding journey. Number two was allowing advisors to customize the fees they were charging customers. And number three was tax wrappers and a full universe. So we focused on the basics. We got that right through an amazing launch party in November, which we're famous for. And we were able to build a momentum that courted bigger networks who now want to start working with us.
And so since then, you've landed some impressive logos. Like, how do you convince a giant to work with a relatively new startup on a new product that was built in 1 month? What's the magic trick?
I think we realized what our strengths were, and we also realized what our weaknesses were. I think our strengths have always been building great product and tech. And the infrastructure we had created for our B2C product actually was extremely strong, with a very, very low friction onboarding, our KYC, AML controls, ability to trade fast, ability to add stocks and other universes very quickly. And the other important thing is speed. I think bigger institutions, they often struggle with that. And I think for them, a company that can come in, build an amazing UX, build a very, very amazing product with all of these things that I mentioned in record time, I think is the key in convincing these bigger institutions.
What about, so you have two core products right now, and one of them is widely adopted by wealth managers now. So what drove the adoption of that? And can you just tell us a bit more about the two products you have today?
Absolutely. So we have a few verticals, and the key insight is simple, that no matter the financial actor, their requirement remains the same. They want simple investing tools with an amazing experience. That's really what they desire. And something that has helped us in this journey has been a very interesting shift in the market, which is that I think a few years ago, bigger institutions considered companies like Revolut and Monzo as fintech startups. They were like, oh, these are startups. Yes, cool, that's great. But I think what's happened in the last sort of couple of years is they are no longer startups. These companies are moving fast, and they're taking market share away from bigger institutions very, very aggressively. So naturally, there's alarm bells ringing in bigger institutions, and they want to partner with companies such as ours, where we actually guarantee them very, very fast execution and an amazing product for their customers, and also a great user experience that competes with the likes of some of the best fintech companies out there. So those are some of the moments in this sort of journey that have helped propel us faster. Now, regarding the verticals, we have Shares Pro, which is catered towards wealth managers. We have Shares Savings, which is catered towards bigger institutions that are looking for savings and retirement plans. And the third vertical, which is the Shares B2C, which is the retail platform, which is still sort of organically growing. So those are the three sort of platforms that we're sort of targeting.
And so do you now feel you have the right formula, or is there any more pivots incoming?
I think we have landed on something that works great. So firstly, we have very low CAC because we are distributing through wealth managers. We are obviously, the retention once you acquire these networks is very good. It's a more sort of predictable economic model. So the unit economics works better as compared to B2C. And something that works really well for us is we are true to our strengths. We understand as a company that our strength is three things: amazing infrastructure, amazing user experience, and also very, very fast execution. So as long as these three things are packaged together, our company delivers amazing experiences. And I think that's kind of our focus now, is focusing on the basics, getting and focusing on things that we are good at and delivering them to the best of our capabilities.
And so you would say that this is what allows you to diversify across like different client profile? Is this basically getting the basis right and then applying that to a number of different applications?
That's exactly right. So we just focus on making sure our infrastructure works great, and we bolt on the UX on top based on the need of the customer. And we've never actually focused too much on which actor. We focused on ourselves and making sure that our platform is super scalable, it's regulated, it's very safe, and we then bolt on user experiences on top. So a huge need for us now is also white labeling. That's something a lot of our clients are demanding us to do. So we're also delivering fully white label solutions to some very, very big names. And the interesting thing is that each of these verticals reinforces one another. So the advisory network, they distribute almost to retail, which was our initial audience anyway. Then you have bigger institutions that reinforce the infrastructure that we're building. And third is that our customer experience that we're building is actually from our consumer DNA. Believe it or not, but we still carry this consumer DNA with us in everything we build. And you can't take that away. So every experience that we ship is thought from first principles. It's thought from what is the best possible experience we can deliver to the consumer, be it the wealth manager, be it a bigger institution, or be it the retail customer. So all three just fit seamlessly together now.
So one of the major contracts you've announced is with AXA, leading French insurer. Can you tell me more about the complexity that goes behind this type of contract?
Yeah, I mean, working on anything of that scale requires quite a few processes that we had to put in place. Firstly, we have a partnerships team that we've had to establish that works very closely with the AXA team. And naturally, a project of this scale has a ton of requirements, a ton of things changing all the time, and a ton of enhancements that we had to make to the existing flow. But then again, I think the kind of major value that we deliver is getting this kind of a product delivered very fast. And another thing is that the experience for the end user is going to be an extremely responsive, great UX that they wouldn't have traditionally expected. So this is something that we've been working on for quite some time now. And obviously our infrastructure that we have built for so long now will be able to support the scale of this project, which will involve multi-billion dollars in custody of assets coming over to our system over the next few years. So I think that's a testament to the platform and the experience that we are able to deliver at Shares now.
Is there anything you can share for the year ahead? Anything just between you and me? Any confidential information you can let us know?
I mean, I can give you hints. That's the best I can do. So a couple of hints I can give you is, first, I think there will be an amazing journey that we will construct between our retail platform and also our wealth management world. So there's something that we are exploring there that could benefit both actors amazingly well. And the second is that I think we are mature enough now to realize the value chain in financial services. And something that you will see us do very shortly is enhancing our offering and going deeper into the value chain and coming out with products that are very different but very complementary to what we do now. So essentially a very full suite of investment and savings products coming soon.
Well, thank you so much for joining us today.
Thank you for having me at your lovely office. Love the views.
Thank you all for joining us. I'm Sophia Metz from Arma Partners. I was joined by Harjas Singh from Shares today. Make sure you join us for the next episode.